To say Arizona Metals had a bad day on Monday would be an understatement. The equity closed down 28% on the day after sinking as much as 34% after the morning bell. Why the crash? Well, the company had what we would refer to as a newfound gold moment. In other words, the company, after much retail excitement, failed to put out an initial resource estimate that came anywhere close to meeting investor expectations. And those still holding on paid the price. Bigly. Let's dive in. Don't miss the Rural Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the deep dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. Before we review the actual resulting numbers here for Arizona Metals K-Mine project, let's paint the picture a bit here to give a sense of what investors were expecting in terms of size. Starting with the analysts. The most recent report we could get our hands on comes from the Bank of Montreal, whom previously indicated that after a site visit, they expected the resource here to be in the 14 to 18 million ton range, with an average grade of about 2.9% of copper equivalent, which was based on average length from drilling being 14 meters, alongside a conceptual strike length of 350 to 400 meters and a deposit depth of 900 to 950 meters. BMO also added that cutoff grades could have a big impact here, with the company needing to decide between larger, lower grade tonnage or smaller tonnage with higher grades. Adding to this, former CEO Mark Pace at a conference in 2024 suggested analysts were using a target range of 12 to 25 million tons for the K deposit alone, which excluded 18 other targets on the property. However, Pace also resigned the day that video was released. So take that as you will. Further contributing to the allure of the K-Mine was a historic resource assembled by Exxon Minerals back in 1982, which identified proven and probable reserves of 6.4 million short tons at 2.2% copper, 2.8 grams per ton gold, 3% zinc, and 55 grams per ton silver, which used a cutoff grade of 2% copper equivalent. And then there are the drill results, which all pointed to a sizable resource here. 93 meters of 5% copper equivalent, 126 meters of 2% copper equivalent, and we also have 66 meters at 3.5 grams per ton gold equivalent, 65 meters at 3.99% copper equivalent. In other words, retail investors here were expecting a big deposit. Even BMO highlighted previously that investor expectations are likely to be higher than their own. Unfortunately for investors, that BMO commentary had a bit of foreshadowing attached to it, because the initial resource released on Monday certainly saw expectations crushed. The initial mineral resource here, across all categories, came in at a total of 10.1 million tons, which was dramatically lower than pretty well all expectations. And as Mark over at IKN highlighted, the estimate was conveniently released after the disaster of an AGM, which we'll get into in a second here. The estimate saw resources contained within two categories. The indicated category consisted of 9.3 million tons at 3.2% copper equivalent, which breaks out to 1.4 grams per ton gold, 27.6 grams per ton silver, 0.97% copper, 0.33% lead, and 2.4% zinc. In terms of metal content, it works out to 651 million pounds of copper equivalent, or 415,000 ounces of gold, 8.3 million ounces of silver, 197.9 million pounds of copper, 67.3 million pounds of lead, and 490 million pounds of zinc. The inferred estimate, meanwhile, consisted of 0.86 million tons at 2.4% copper equivalent, or 1.1 grams per ton gold, 15.4 grams per ton silver, 0.87% copper, 0.2% lead, 1.7% zinc. Contained inferred metal amounted to 46.1 million pounds of copper equivalent, or 29,000 ounces of gold, 423,000 ounces of silver, 16.4 million pounds of copper, 3.8 million pounds of lead, and 31.8 million pounds of zinc. All told, that's about 697 million pounds of copper equivalent across all categories, which is built upon a base case cutoff grade of 1% copper equivalent and an underground mining model. The resource is said to cover just 5% of the 10-kilometer long strike of folded prospective host rocks at the K project, with the project remaining open for expansion along strike and to depth. Arizona Metals also says that there is potential to expand between existing drill holes within the deposit and upgrade those inferred resources, which is of course positive. But also consider that this small resource was based on 134,000 meters of drilling across 234 holes that were conducted between 2020 and May 2025. So roughly 5 years of exploration and tens of millions of dollars were spent to just get this resource established, which isn't exactly great. The market reaction to the results was, as we indicated in the intro here, not good. Obviously, investor sentiment matched that, with commentary being rather blunt. Over at the CEO.ca board, Fool's Gold simply responded with poop. Steady G got clarity on why insiders had no interest in buying up the stock. I Like Metals was rather honest in his assessment, saying the story had changed and they would be out as a result. Random Loss Accumulator, meanwhile, thinks the focus on tonnage is silly and that the MRE will have no bearing on the final mine, which doesn't make much sense to us, but hey, that's what makes a market. How She Now, meanwhile, thinks that the disappointment is going to lead to funds buying in. And then there was Delogfather, who was sensible on the matter, who simply asked, how much more do you think the market will fund in relation to further resource expansion? Well, DJB7 provided some insight on comparables with the ASX-listed New World Resources and their Antler project. He says that for value comparisons, let's take a look at Antler, which has 12 million metric tons at 4% copper equivalent, so it's relatively similar in size. The Antler project has a $500 million MPV, an IRR of 30%, and needs about $300 million in capex. This worked out to an acquisition battle between Camel and Kinterra, and currently it is valued at about 155 million US dollars. On the analyst side of things, the reaction was quite similar. BMO was quick to cut first thing Monday morning, reducing Arizona Metal's price target from $2.75 to $2 a share following the release of the MRE, which was just after halving the target from $5.50 to $2.75 less than a month prior. Commenting on the results, BMO said that grades were slightly higher than expected, but tonnage disappointed, with tonnage more than offsetting the improvements in grade. The price cut was said to reflect a smaller scale project than initially expected, although the equity continues to have an outperform rating. And then there's the AGM that was held the week before the resource estimate was released. To say it didn't go to plan would be an understatement. To paint the picture here, 2 directors in May announced that they would be retiring from the board, with one new nominee, Brianne Bay, CEO of Angus Gold, placed up for election. 5 others, meanwhile, including CEO Duncan Middlemiss and Chair Jacques Perron, were running for re-election. Originally scheduled for June 18th, the meeting was postponed to June 26th in an effort to encourage greater shareholder participation. Those that have been in the industry for any length of time should know what a delay in a shareholder meeting means. You guessed it, they didn't have enough votes. A total of 3 board members failed to secure their seats, with the only returning members set to be CEO Middlemiss and Chair Perron. The newest nominee, Bay, managed to secure her position on the board while still seeing 17.5% of voting shareholders vote against her. But apparently the shareholders' opinion doesn't matter much here, with those 3 that failed to win re-election graciously agreeing to continue their roles on an acting basis, at least until replacements have been named. Unsurprisingly, Market IKN was quick to highlight the absurdity here. Okay, so let's wrap it up. So what's next for Arizona Metals? Well, they have promised a preliminary economic assessment will be released in the second half of this year. And 10,000 meters of further drilling is still planned for the K Mine project. But that drilling is largely to be focused on the K North extension, north central and western targets at the project, which will be drilled for the first time, both efforts of which are fully funded. Beyond that, however, is anyone's guess. As we suspect, it will become materially harder to raise further funds for exploration following the release of this MRE. Alright everybody, thanks for watching. If you have more stories you want us to cover, as always, let us know in the comments section. Also, if you enjoyed this video, do us a favor, smash that like button, subscribe, and ring that notification bell. Guys, we've also got content over on our website, thedeepdive.ca. If you want more mining content, be sure to check it out. Alright everybody, thanks for watching.